Hello there, this is James, and you are watching the latest episode of our Primus live series. And a massive thank you for joining us. Now, before I introduce you to my very special co-host, remember these little episodes of the Primus live webinars are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Now, before I introduce you to my co-host, let me give you a bit of an introduction on her. Her name is Kaia, and she's our head of investment research here at FX Primus. She's worked as a portfolio manager and investment manager with exposure to both public and private markets. And before FX Primus was lucky to get her, she was a senior investment associate at a hedge fund in Singapore and a vice president in Bank of America Merrill Lynch. Let's all welcome Kaia.
Hey, James. How are you? Good to be with you again.
It's always a pleasure. It's always mine. Always mine. So great to see you. I have to say, you look absolutely dashing in pink. Really
Thank
brings
you so
it
much.
up. You're looking really lovely today. So how are you? How's your day going?
Doing great, preparing for Christmas and looking at the markets. So we've had very interesting trading sessions. We have ECB announcement today.
Mm-hmm.
We have European Council taking place. So there's a lot of happening on Euro USD. All the other asset markets have been sort of pointing higher. So definitely we're seeing something that we're going to discuss today, which is the Santa rally.
That's indeed. Yes, the Santa rally is our topic of the day, which I think maybe very few people actually have heard of, but it is an actual phenomenon, isn't it? So we will be talking about that today.
Yes. So before we start with our sort of presentation and slides, I would like to spend a few minutes just going through some of the charts. So pulling up my chart here, and a lot of noise on this one. But I would like to walk through what are the things that I'll actually look on the charts. And those who have seen our previous technical analysis sessions, you are going to recognize some of the terminology and some of the indicators that I'm going to mention. So need not to worry. It looks a bit messy, but actually it all makes sense perfectly. So what I have open here is S&P 500, which is the S&P sort of 500 biggest companies in the US based on their market capitalization. So this is my day chart. So I always like to look at day charts because I trade sort of long-term positions. Looking at the first part of the chart, a lot of rainbow colors here. And those who have seen our moving averages section, I like to put my moving averages in the color of the rainbow. So the red color here, which is 8-day moving average. Then we have orange color, which is the 21-day moving average. We have yellow, which is a 34-day moving average. Green one represents 50-day. Blue one, which is sort of gone here, is 100-day. And very important one, the purple one, 200-day moving average. Yeah. So those who trade trends, you always want to see rainbow formation on the chart. If you trade bullish trends, you want to see rainbow in the right order. And those who trade bearish trend, you want to see a sort of inverted rainbow. Just going to zoom in slightly, looking at the November and December trading sessions. So you can see we have a very nice upward trend here. All the rainbow is sort of stacked. So momentum traders, this is the perfect indicator for you. We have a bullish trend in place when it comes to S&P 500. Moving on to the second section of the chart, this is the volume. I don't pay too much attention to this unless there's huge spike or there's very depressed levels of sort of volume. And we're going to see that during Christmas trading session because liquidity is going to be thin in the market. Institutional investors are all having eggnogs and, gingerbreads. So most likely the volumes are going to come down a bit. The purple section here stands for RSI, Relative Strength Index. So those guys who were with us, I think it was mid-November webinar.
It was actually our very first. It was actually our very first episode.
Was it?
Of Primus Live.
You have a good memory. Good memory.
There we go. You see, very first episode where we discussed the RSI. But yeah, carry on.
Yeah. So RSI basically shows where are we going with the trend? Are we overbought levels or are we oversold levels, and it's an oscillator, meaning it goes from 100 to 0 all the time. And what you want to see is that this indicator line should be within the control area, I shall call it. So between 80 and 20. If it goes above, means there could be a bit too much heat in the market, may not be the best time to enter, or if it's below, it's the other way around. So it depends again on the trading strategy as such. For me, profit taking and stop loss happens when my indicator goes too far from this control area here. Now, what I like to look at as well is stochastics. We discussed this, I think, during the same first session. What I have here is the slow stochastic. And slow stochastic basically shows where is the price in relation to the 14-day price action. So here we see that S&P has been trading above the control level, which means we are in a very strong upward trend. The price is higher than it was during 80% of the last trading sessions. It's a bit of a mouthful here, but stochastics is interesting one, meaning that it doesn't actually show you profit taking or sort of stop loss, because if it's a very strong trend, you're going to see a lot of overbought levels. And the last one I like to look at is the directional move index and the ADX. So we discussed this the last time when we talk about technicals. This gives very good indication how strong is the trend at the moment. So ADX sits at the moment at 21 levels, which means the trend is not very strong or it's losing its momentum. At the same time, the ADX plus is at 30, ADX minus is at 21, which shows that we still have a bullish trend in place, but not as forceful as maybe momentum traders would like to see. So just to summarize all this, what I've just mentioned, SPX, clear upward trend, not overbought based on RSI, slightly overbought based on stochastic, which is fine because it has been very sort of bullish market. And the strength is sort of, getting weaker, but it's still in place.
So it's like I say, it is a bit noisy, the chart, but like you say, you've got so many things in here, which is really going to help you with that. And it's very pretty. It looks a little bit like a Christmas tree, which is perfect timing for the time of year. So again, this is for educational purposes only. And I always say this, but with all these indicators in place, what is this telling you roughly, in your opinion, as opinion only, not as advice? Are you still very much bullish with the S&P 500 as it stands?
Yeah, I agree. I mean, definitely bullish, because we see the price has found support on 8-day moving average, which shows very strong bullish trend from the short-term perspective. Also, it has found resistance at the upper Bollinger Band level. So I would see Bollinger Band continuing to be the resistance lines, because there's no other resistance in place anymore. We hit another all-time high. Actually, it was this week even, which was on the 8th of December. So there's no resistance from price action perspective, but only from the range perspective. And I'm referring to Bollinger Band here. So for the traders who actually want to trade this type of chart from a short-term perspective, as long as the price gets support from 8-day or 21-day moving average, short-term trend is in place. However, once 8-day moving average crosses below 21-day moving average, I would say that short-term momentum may be over.
Okay. Brilliant.
So this is SPX. I also want to show one chart that unfortunately not available on our MT4 platform, but it's on TradingView, and that's Russell 2000, which is US small cap stocks. And Russell has always been a bit of indicator of the real economy. So those companies who actually have to get financing locally, they can't go to a big investment bank and just issue bonds. So it really shows the economic activity within the US. And again, Russell is just a beautiful chart of upward momentum. So we see higher highs, we see lower lows. It's trending higher. We have rainbow formation, in particular after 9th of November event, when we had the vaccine, and also when the US elections were sort of determined. So price getting support from 8-day moving average. We're finding resistance on upper Bollinger Band level. RSI 72, not overbought. Stochastic, yes, overbought levels, but again, can happen when it's a very bullish trend. And ADX at 40, very strong trend, as well as DMI plus 38, DMI minus 11. Not a trading advice, but this is a very beautiful example of bullish momentum trading. I mean, for those who want to trade momentum, this is this. However, entry point is not great when you have such strong trend in place. You may want to wait a bit until you have a bit of a pullback.
Yeah, absolutely. I'm glad we finally managed to bring up the Russell 200, because I say it's something which I know we've wanted to talk a fair bit about, because you hit the nail on the head, where, to be honest, the Russ is a real indicator of how healthy the economy is and how bullish or how optimistic the economy is, because, like you rightly said, it's not propped up by companies. You can simply borrow money so easily from other massive institutions, whereas the S&P, obviously, got the big guys in there. Their actual liquid assets is maybe not so liquid. Where with this one, it is the real deal. And as you can see, as you rightly said, again, we are looking at a very bullish momentum with it as it currently stands. Not a trading advice, obviously. So yeah, I'm glad we can finally get to discuss this.
Yeah, and one more comment about S&P 500 is that this is market capitalization weighted index. The bigger the market cap, the more weight it gets. So at this point, it's about 23% dominated by 5 stocks only. So that's the FANG, basically, those big mega cap US technology companies that have benefited immensely from work from home trends. So S&P 500 used to be historically very good indicator of sort of equity markets in the US. I have a feeling it's sort of losing its importance these days. So I think there could be some other indices, or at least looking at them as a sort of wholesome, you know, to get a good understanding what's happening on the markets. I actually have a couple of data points here as well, which I think we have mentioned before, but in 2020, S&P was up 12%, Russell up 9.1%. But Russell had an amazing November. I think they were up like 12%. So you just gone through the roof. And I think actually it has a tool here as well. So let's see, 30th of October till this day, it's been, doesn't show it. Okay. So it shows 25%, but that's not actually the real return. So it's been 12%. So
yeah.
Okay.
It's still very, very impressive, though, isn't it?
It's been amazing.
It's been a really good run, and like I say, not giving advice, it looked like it may potentially continue for the time being, while there is optimism. So we'll see. What else do you want to have a quick look at?
I want to look something that you like a lot, which is gold. Just going to pull up gold as well. So gold actually suffered a pretty significant loss here, which was the 9th of November trading. It has recovered a bit now with this last week, but it's still finding a bit of resistance. This is the 34-day moving average. And those who use moving averages, and as you can see, these last week, moving averages are very much roped. There's very little air between them. Meaning that may not be the best time to actually use moving averages as sort of indicator. So if they start becoming too roped, it's very difficult to actually identify a trend here. So I actually like to see a bit of more air between the moving averages before I enter my trades. But I like the way 200-day moving average. Yes, the price fell through, but at the same time, it rebounded pretty much immediately. So this means that institutional investors saw the price dropping below that very much psychological threshold and immediately went and bought gold again.
Yeah, well, we covered this actually last week in the last episode, where we actually showed Fibonacci retracement, and gold we brought up in particular because, excuse me, those who know me, obviously I'm a gold trader by heart, but there were some very interesting levels of where obviously he's bounced and retraced from the 50 on the, this is on a daily 50 on the Fibonacci, and it's currently hovering around the 38.2 level, which is around about 1,841. That sort of proving to be a resistance for the time being. But funny enough, and we're going to talk about this a little bit later, but gold tends to, this time of year, occasionally tends to do quite well. And it's always interesting to see December. It tends to sort of bounce back a little bit, but it is really interesting to watch at the moment. And in my opinion, I'm watching the 38.2 on the Fibonacci retracement level quite closely to see if that can indeed be broken eventually. But at the moment, it's holding steady around there.
It's holding steady, yeah. And I'll just mention also the bottom part of the chart here. So DMI show us that the bearish trend is sort of dominating. The difference is not huge. It's 27 versus 19. Although anything below 20 when it comes to DMIs, it's a very weak signal. So I wouldn't use that as a sort of clear indicator. However, you can also see that the trend is going lower. So ADX is currently at 23, showing that there is a weak trend in place. So my reading from here is that the bearish trend is weakening. And bear in mind that DMI uses 14 days as the time frame, so 14 trading days. So even though we see a bit of a spike here from price action, actually ADX goes back slightly further and looks at it in a 14-day context.
Absolutely. No, like I said, I think, and the RSI, obviously on my chart, what I'm looking at the moment is in the middle, isn't it? It's not either overbought or oversold. So it's really indicating that I think. Again, not trading advice. It's just a conversation, people, so don't freak out. I'm beginning to think that if it can break through the 38.2 Fibonacci retracement level, then we will see that the bulls maybe start returning for the yellow metal. Definitely. Is anything else? What else do you look at?
I want to pull out Euro USD again because the ECB just announced that they are going to add another 500 billion worth of euros of stimulus, which brings the overall stimulus from the ECB now to $1.85 trillion. So just as a data point, the monetary base in Europe has increased 42% this year, which is historical, ballooning. It's unbelievable how much more liquidity we have in the system. But Euro, what is Euro doing? Let's see, Euro USD. So clearly, Euro USD broke the resistance of 1.20. It's been gaining quite a bit. It actually broke the Bollinger Band resistance here as well, but now has retreated again to 8-day moving average level. Today's price action has been bullish. I'll pull out the 1-hour chart a bit later as well, just to show how it's been now since the announcement. But Euro, again, it's not overbought. It's on the border of being overbought from RSI and stochastic perspective. And DMIs show us that there's still a strong bullish trend in place with ADX increasing and currently at 27 levels. So looking at this, I would say Euro USD still potentially bullish. Of course, any news coming from the monetary perspective could just, mess up the trend. Or what we could also see is, with the second wave of coronavirus in Europe, we have so many lockdowns already in place. Even in the country where we are based, in Cyprus, we're going to have another wave of sort of restrictions kicking in tomorrow onwards. So very weak economic data could hamper euro gains, I would say.
Yeah. What I say? It's been trading around levels not seen since April 2018. So it's obviously got a little bit of that. But as you rightfully said, with Europe going under further restrictions and things like this, it could take the wind out of its sails, so to speak. So, no, I would agree on that. Do you want to have a quick chat? What else is going on in the markets as well at the moment?
Yes. I do have a couple of data points that we did discuss during our previous webinar. I'm just going to put them up here. I'm not going to go them through in detail anymore, but I've updated some of the data. So we have, COVID cases continue to spike globally everywhere. I don't think there's any country outside of Asia that actually is managing this thing, reasonably. US still number one, 3,000 deaths, I think, yesterday, which was crazy. Daily cases, 200,000 new every day. But there's a big update since the last time we spoke. So UK was the first Western country to actually start vaccinating people. Do you know what was the name of the second male who was vaccinated in the UK?
No, I do not. What's the name of the second male?
William Shakespeare.
Oh, do you know what? I did know that. Yes, I read that and I thought it was a joke. But no, it was. He's actually used William Shakespeare, and that's pretty fitting, to be honest. So
That's pretty
it is pretty fitting.
So yeah, US is going to start from the 15th onwards. However, Pfizer has already given heads up that there aren't enough doses, as the countries have requested. So Western countries, unfortunately, are hoarding. Developing countries are going to get their batch probably second half of the year. There's different approaches, but I think it's going to be the frontline workers who are going to get the first batch. So people like you and me, we're going to have to wait until February, March until we get our vaccine.
Well, not being funny, so you're perfectly healthy, so you're going to be absolutely fine, my darling.
I am absolutely not concerned. What I want to do is travel, though. So a few companies said that they're not going to allow people to get on board unless they've been vaccinated. So that's my main motivation to get that injection.
Got you. Fair enough.
So yeah, I just wanted to mention that Moderna is pretty close as well to get everything done. Late trials happening. I think they should be ready to release their batches probably by January. We still have euphoria in the markets, as we've just shown from equities markets.
Yes.
All the main US equity indices are hitting all-time highs. So I've just gone them through today. Anything from cyclicals to defensive, everything is basically all-time high. I think what wasn't hitting all-time high was utilities, which was short-term indicators were down. However, everything is sort of pointing higher, so definitely a lot of money going into equity markets at this point. Inflation still anemic or negative. China had the first negative inflation as of yesterday, although that was on year-on-year basis compared to last year, so negative 0.5%, which is still bad because they are the only economy actually growing. And if they don't have inflation, then Europe doesn't even have a chance.
No, we're all in trouble. Yeah, absolutely.
Central banks continue to pushing into money into the economy. And I think on this slide, I'm not going to go through in detail. Again, those who were with us last week, please go. Those who weren't with us, please go through our previous webinar. We go these through in detail. But I think now it's time to actually talk about Santa Rally.
It is. Because, let's face it, it's December. It's December the 10th now, so we should be getting in mood for the festivities. And of course, there's an interesting thing which happens this time of year and goes into January, is what's known as the phenomenon. I said it properly there. The Santa Rally.
Phenomenon. I like that word.
Yeah.
Try saying that having eggnog.
Phenomenon. I've said it. There you go. That's not too bad.
You are a native speaker, so it's not very impressive.
Makes no difference. I'm terrible with big, long, complicated words. Just ask our producer, Michael. Anyway, so going on, so tell us a little bit about what the Santa Rally is, why this is such a special event and does, catch the attention of many people.
Santa Rally is an interesting phenomenon that we see in the market. So basically, it's predominantly in US equity markets and happens at the end of December or early January. So markets tend to rally during this period. And there are multiple different reasons. Most of them are just theories, although there is some rationale behind them. So one key reason tends to be tax, meaning that in most countries, you have some sort of capital gains tax in place. You have to pay whatever you sort of how much your equity has gained in price. You have to pay 20%, 15% on that. So certain institutional investors, they choose to harvest their sort of taxes, meaning like they sell their loss positions to offset the tax against their capital gains. So that can be part of the tax reason. Also, there's optimism. Everybody's in sort of Christmas mood, holiday mood, looking at next year, going to be amazing. So let's buy equities. One of my favorite reasons is that institutional traders are on holiday. So they're taking their Christmas breaks. They're away from the trading desks. And the way institutional trading works, by the way, is that you are not allowed even to log into your system. So you basically hand over your books and compliance says, we don't want to see you for the next 2 weeks. You're not allowed to look at your email. You're out from your desk completely. So retail investors come in and they tend to push up the market because generally they are a bit more optimistic.
So they get a chance to be part of the game a bit more now because the big boys have gone away on holiday.
Exactly.
Okay, makes sense.
And there's also thin liquidity because of the same reason, because you just have less traders, transacting on the market. And there's also the 13 salary / bonus rationale that people actually get money during December,
Yes.
whether it's just the 13 salary or actually they'll be performing
Yes.
well. And what they do, they just put money into their 401ks or they just buy equities directly. So go figure.
Yeah, there you go. Makes sense. But like I say, this is again, it's not a guaranteed event. It's not one of those things. Nothing in this. I love the cup, by the way. There you go. See, yeah. Just in case you don't know, you're watching Primus live, so we have, there's our cup to prove it. Again, it's one of these events which is not sort of guaranteed, obviously, but it is something which does potentially happen. And it is mainly a US phenomenon, isn't it? It's not something like you necessarily see in London or in Asia. It is very dominantly with the US. And I think what a lot of theory has, and I think we have this on our next slide, actually, the main assets to sort of trade and indicate. If we go on the next slide here, is, like I say, as we can see, like on average, since the 1950s, you see the Dow Jones and the S&P, it's sort of gained around about 1.4% to 1.3% respectively. And what I like about this little chart here, what also the sort of Saturn rally says is that it does give an indication as well that how it's going to do for the rest of the year, if you know what I mean. If it has a good, this is a chart showing the S&P 500 from 1990. So it does sort of show and indicate that if it has a good finish to the year, then the remaining 12 months is going to perform quite well. And that's quite an interesting statistic to look at as well, I tend to think.
Yeah, I was just reading an article by Ed Yardeni, who's, I don't know, economist / researcher. He feels that Santa Rally may have already happened this year because November was exceptionally good month. We haven't had that good November ever. So he feels that, we may be a bit exhausted already, all the fumes, but who knows? Again, depends on the central bank activity, depends on the economic data that we see in the US and in Europe. So we may be having a great Christmas. However, 2018 Christmas, remember the plunge? That was horrible.
Yeah, it wasn't nice.
It wasn't nice. And imagine being the trader who was on compliance leave. You come back and you see your positions minus 40%.
A lot of traders got cold that year from Santa. No present from Santa that year. Yeah, absolutely. It's like I say, it's not a guaranteed event. It is one of those which the market does sort of talk about. But like I say, if you were to trade the Santa Rally, though, what sort of suggestions would you, or try and trade the Santa Rally? What sort of suggestions would you make?
So I always recommend people to trade with a plan. And we've just discussed this during our risk management webinar. Again, those who haven't seen, go back to our YouTube, find our videos. There's risk management webinar when we discuss trading plan and trading journal in detail. So first thing, either you look at the charts, either you're technical or you're a fundamental trader, depends. And then form a thesis. Looking at Euro USD, for instance, I look at the chart. This is just a theory here. Perhaps it's going to go higher, potentially. Then you look at market sentiment, meaning like, yes, you have a view maybe about specific asset class. What's the market sentiment right now in general? So to pull an example from equity markets, let's say you like Facebook, you think Facebook is going to be bullish, but the overall market is going down. Then it's very hard actually to make money on that single name. If the entire market is sort of in a bearish mode. So market sentiment is very important with the overall picture, holistic picture. Then add the trade to your trading journal, write down every single detail, write down on your stop loss, write down your profit taking levels, very important. I mean, you cannot enter any trade or shouldn't enter any trades without having these details in place. And then determine an entry point. I mean, yes, you may have a bullish trend in place, but if the market is very expensive, it's not a great entry. So you may want to wait a bit until you have a pullback, or if you're trading a bearish chart until you have some sort of recovery. So again, you have that slightly more momentum and a bit more profit to take from your thesis. And then trade.
Yes, there you go. Just obviously when you're absolutely sure and you've done your proper homework and you've done your trade analysis, done your risk management, go for it.
Yes, and very important is also to monitor the trades, and not from the perspective of being anxious and, oh, what is this doing? Not in every 5 minutes. Of course, depends what type of time frame you trade. But if you trade a daily chart, you don't have to log in every 5 minutes. Log in maybe once a day, twice a day. Check if your thesis is still in place, if the chart still tells the same story, if the fundamentals are still there, and act based on that. If they're not, then you have to exit. If they're still there, continue to wait until you hit your stop loss or your profit-taking levels.
Yeah, absolutely.
And very important, I keep emphasizing, when it comes to stop loss, you have to cut your losses early. You cannot wait until maybe it's going to reverse. I have a feeling that maybe the market is going to turn. No, you cut your losses as early as possible. And that's how you're going to be profitable in the long term.
Yeah. There's two things on this. There's the old saying, take care of your losses and your profits will take care of themselves. But actually, the point you just made there, I think we're going to cover, is it next week in Trading Psychology? We're going to discuss this. Is it Trading Psychology next episode? I can't remember.
Yes.
It is. Because one of the big things that I talk about a lot is the battle of hope and fear. And that is where, obviously, like you rightfully said, if you have a losing trade, people hope it's going to go back in their favor. And by doing that, what they then do is hold on to the trade far too longer, making the loss even bigger. So again, we'll probably go in a lot more detail on that and how to conquer that. But a very, very good, valid point. Absolutely 100% on the money with that. Now, I think we've got a couple of questions.
We have some questions. Yes, please.
We do. Okay, the first question is how best to trade indices and stocks and the best indicators.
I would say that please go through our previous webinars. We have covered most of these in pretty much detail. So again, how to trade depends on your trading style. I think maybe we haven't covered this one in detail, meaning whether you should do technicals, fundamentals, momentum versus contrarian. We will do that in 2021 for sure. But in general, you have to decide what type of trader are you? What do you want to trade? How you want to trade?
Absolutely.
And then again, you follow the last slide that we had. You form a thesis, you determine your entry points, exit point, and you trade. Sounds very easy. Of course, it's not.
I think that's you made this point last week, and it's a great point. Part of what makes trading work for some people is, first of all, working out what type of trading style or what sort of trader you are. What fits your personality, what fits your lifestyle, be it a position trader, day trader, swing trader, scalper, etc., etc. So that's one of the first things, and that is something I probably again will discuss in later episodes. Another question here as well is the market going to change in a positive way? And I think really at the moment, we discussed this on the slides earlier on, the market is quite bullish at the moment, depending what you're looking at. Maybe not so much for safe havens, but yeah, at the moment it is still pretty bullish, the market, isn't it?
I would say going from here even more bullish would be very hard. Of course, we always deal on with a probability scale, never with certainty. So
no, absolutely.
Who knows?
Yeah.
Maybe we're gonna have 20% gain tomorrow.
Yeah.
More likely than not, I would say bullish trend is expected to be continued, but for how long we never know.
Exactly. If again, like we always say in every episode, if we knew that, they'd be looking at an empty chair and an empty studio right now, because we wouldn't be here. We'll be on a beach trading somewhere. How best to trade indices and stocks? Again, it's the same question. Sorry, my fault. I repeated it. Yeah, that's pretty much limited on the questions we have actually today on the market. I do have a question here though, and it's actually by me to you. What is your favorite Christmas song?
Ooh, it's an Estonian song, unfortunately. I'm not going to sing it for you, but I can send you a link to YouTube later. So perhaps in the next episode, we can play my favorite Estonian Christmas song. But from English songs, I quite like Jingle Bells, to be honest. So it's quite classic. Very boring.
Jingle Bells.
What's yours?
The one I can sing, actually, when I'm in the festive mood, and I can do, is Santa is Coming to Town. I'm not going to sing it, obviously, but if you were going to sing, I was going to sing, but you're not, so I'm not going to. So Santa Claus is coming to town. is probably.
It's a good one. I like that. But I'm just going to save our audience from my singing. It's not going to do any favors to anyone.
Yeah, that's okay. I'm going to save my pride and my the little bit of pride I have left. Actually, our producer just sent us another question. Again, this is brilliant. This has come from somebody who's actually watching the show. When can we expect the rally to start? He says. When should we expect the rally
to start? First question, what rally? And second, I would say a lot of rallies already have started.
I think they're referring to the Santa rally. The Santa rally tends to happen, again, like we say, it's not guaranteed, isn't it? It's like for the last couple of weeks of December, leading into the first week of January. That's obviously when everybody's been paid and all this jazz, part of the theory. So that's the period of time it tends to happen historically, around that time.
That's historical, again. And like as I mentioned before, there are market players who think that the Santa rally may have already happened this year, but we'll see. December is still first couple of weeks. Today's the 10th, right? So we'll see. But most likely it's going to be, I think it was the 22nd of December onwards until the 3rd or 4th of January generally.
Yeah. No, I totally. I think, historically speaking, again, it's like I say, and I think the point you made earlier on, and a lot of analysts, maybe the market this year is so exhausted by November, we might not see much. I think that's all the questions we have for today. What I will say for the people out there, we love your questions. We love your interaction. It is really the highlight of our little shows we do. Because without us finding out what you want to know or what questions you have, we want to build the material around for your knowledge, etc., like that. So please keep the questions coming in. Please keep the interaction in, because both me and Kaia absolutely love it. And it's my favorite bit. It's your favorite bit too, isn't it?
I love it. I love the organic questions because I feel a lot of these discussions that we have actually come from those questions. Whenever an interesting question pops up, we have an idea already for the next webinar. And talking about next webinars, as you mentioned, we have next Wednesday, if I'm not mistaken, we have trading psychology. Then we're going to take 1 week of break because it's the Christmas week. I'm not going to be here. James not going to be here. And we're going to come back the last week of December, and then we're going to do a recap of 2020.
Yes.
We're going to talk about major asset classes. We're going to talk about events that move the markets, and also peeking into 2021, what may happen next year.
Yeah. Exactly. We might even sort of say what we think, or maybe have a personal bet between you and I what we think is going to happen in 2021. Make it interesting, etc. Definitely.
And I think what we have discussed also is getting the questions from you. So please feel free to reach out whichever social media channel. We're pretty much on everything, Instagram, Facebook, YouTube. Just drop us a comment, leave us a question, send us an email so we know what we should cover going forward. But we have a pretty comprehensive plan, I think, until end of January, and we're going to publish that on our social media as well, so you're going to see what are the next topics we're going to cover. Brilliant.
So like I say, still got a fun part from a little break when Kaia is having a break. I need to have a break to put some more Botox in my wrinkles. Apart from a little break, we still got plenty of Primus Live episodes coming up, certainly next week with the trading psychology and obviously the end of year wrap up. On that note, should we say goodbye to the fine people?
Thank you so much for joining. Really appreciate everyone, joining our lives and sending us the questions. So much appreciated, and we'll see you next week.
You will indeed. And before I sign off, all I would say, remember, these little episodes of ours are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next week, have a fantastic day, evening, afternoon, or morning, depending where you are around the world. Until next time, every single one of you, trade safe.